capitalized profits are very, very strong. In fact, if you look at the GNP profits, NIPA profits, they're up 127%. If you capitalize that with the 10-year Treasury, they're actually up 171%. That's from the all-time lows in late 2001. What's interesting, Don, is S&P 500 is up 91%, and the Wilshire 5000 is up 104%. So therefore, what we're seeing is profits and capitalized profits with the 10-year bond rate are still way ahead of the advance in stocks. Question, does that mean we have quite a ride left to go?
Well, it could mean a couple of things. One thing it means for sure is that there's been no irrational exuberance, multiple expansion since the bottom in October 2002 and March 2003. PE ratios are basically exactly the same because the market's gone up big, but as you point out, earnings have gone up big too. So multiples haven't changed. Sentiment is still as bearish today with stocks at all-time highs as it was in the teeth of those terrible panic bottoms. So what does that tell you? That tells you that, first of all, there's no sentiment problem here. Stocks certainly have room to run, but it may also tell you something else of a slightly more cautionary vein, and that is perhaps the stock market is anticipating that interest rates are going to have to move a lot higher here, and that'll change those that capitalization calculation you talked about.
All right,
so,
yeah, that's an important component. I agree. If you've got rising interest rates, if that 10-year rises 50 or 75 basis points,
and I think
then
it
these
will.
Valuations are going to deteriorate. But the good news is it hasn't happened yet. Don, you're my gold commodity man. Gold is approaching $700. That's kind of a DMZ line for gold. And, of course, copper was strong this week. And the Journal of Commerce Metals Commodities Index is still strong. Now, what does that mean? Because it does suggest inflation, but we had a great inflation number earlier this week.
Well, let's also talk about the dollar making new lows every day. That suggests inflation, too. And don't let that March inflation number fool you. That was March madness, literally. That was all in two categories. That was in apparel and that was in hotels. And hotels, that was all about a seasonal adjustment because lodging rates didn't rise as much for the NCAA playoff March madness rush as the bureaucrats at the BLS calculated they would. So when you back out that seasonal adjustment, you had a 0.04 inflation reading core, not a 0.01.
Well,
so
okay.
That'll wash out next month. Believe me.
Well sliced, well diced to promote your point of view. Very good. Well sliced.
It happens
and
to
well
be true,
diced.
Larry.
I understand. It's Don Luskin, JOC Industrials. I mean, those babies are still high, high, high. And I want to ask you, Don, look, on this euro-dollar thing, okay, the Europeans are very tight by all accounts.
Right.
Their interest rates are tight. That could mean that the gold increase is a function of the dollar weakness against the euro. It's a substitution effect. It may not have any inflation content.
Well, the dollar is the unit of account through which we look at gold and through which we look at the euro. So it's not a surprise to see gold up and the euro up. That just means dollar down. That means we're printing too many of them. We're going to have to pay the price someday.
Or that means that we're not as tight as the Europeans, and maybe the Europeans are too tight. When you go to the other side of the pond, we're not falling against the yen. We're steady as a rock, and we're losing a tiny, tiny bit of ground against China, which, by the way, has a core inflation rate of 0.9%. That's the thing. We don't do that much trading with Europe anymore.
Well, I really wouldn't take a whole lot of pride in being steady against the Japanese currency, a country where interest rates are, what, 25 basis points?
Right, and the fix is in by the government, right?
Say, Luskin out there in the West Coast, you live right next door to China. What do you make of this? I mean, here I'm reading this on the front page of the New York Times. In China, talk of democracy is simply that. You know I always believe the New York Times. What do you make of this, Don Luskin?
Well, first of all, you have to imagine the sorrow among the staff of the New York Times in having to report that China is moving toward democracy and away from communism. I mean, can you imagine what it took for them to admit that?
I haven't seen Paul Krugman endorse democracy for China, but go ahead with your point, please.
Well, my point is I think Milton Friedman's right. I think China is on a long-term path toward liberalization in the old-fashioned sense of the word meaning freedom of markets, freedom of political markets and economic markets. Friedman's right. They do go hand in hand. Just that China learned from the unsuccessful shock therapy experiment that happened in Russia, where all with the snap of a finger, they went from socialist dictatorship to Wild West free market economy.
Right.
And the result has been an oligopolistic disaster.
Right.
China is taking it step by step.
Well, of course,
and it's going to take a long time.
They do. And I want to comment. Don Luskin, two of your favorite indicators, the index of leading indicators and the inverted yield curve. You got a thought on that?
Oh, please. I mean, I just leave it to the conventional wisdom to watch that stuff. I mean, look, what we have here, we have an economy that's just very hard to analyze by conventional terms because it's a deck with a joker in it, and the joker is housing. If you take that joker out of the deck and you look at the last year of quarter by quarter by quarter by quarter GDP, the non-housing economy has just gotten stronger and stronger, even though the overall economy, including that joker, including housing, appears to be getting weaker and weaker. So we can't just simplistically say, oh, there's going to be a recession or the economy is going to do this. We have got to pull that joker out of the deck and say housing's going one way, the economy's going another, and I personally don't know how to predict a single sector like housing. It is a joker in the deck. It is a wild card. I don't know what's going to happen.